Good morning, everybody, and happy Tuesday. Thanks for joining us on this event on navigating the Twilight Zone of seed funding 2020. To do that, we are joined by some of our good colleagues from Europe to get a good and broad view of how to understand the current situation and how to get the best out of it. And to start from the north, we have Sanna from Creandum, who's sitting in Stockholm. We have Jacqueline from Peak Capital, based in Amsterdam. We have Sia from Seed Camp, who's based in London. And we have Michele, who's from Blackfin and supposed to be based in Paris, but went to Italy instead. So they will have the chance to introduce themselves just in a while. But to set the scene and the reason why we want to have this talk or discussion is that we saw the stock market plummeted on February 21st. I guess we all woke up to and faced a completely new reality. Here in Denmark, our Prime Minister, she went on television the 11th of March on a Wednesday and basically closed down the whole society. And we all had to learn to work remote, in 100% remote, just on the fly. And I think most of the companies turned all their attention inwards, and we did the same. So we analyzed our portfolio companies and tried to understand, who was most troubled by this new situation and where was the runway the most critical. I found this. I found this paper here from Untitled Ventures, who surveyed a lot of founders from all over Europe and Israel and the US, and they found out that one of the most critical things that concerned the founders was fundraising. So 58% was concerned about fundraising or actually running out of cash. And combined with we work in the early stage, most of the companies are short of runway usually. So we raise normally like 18 months of runway. So this is going to be quite critical. In the survey, they also found out that roughly half of their companies, the surveyed companies, had at least less than 12 months, and that was in March. So we think it's a serious concern to face. If we look at our specific portfolio, I think the numbers would be roughly the same because it's more the structure of the phase. So what to do? Friends to the rescue. We invited some of the best investors in the next stage. So people who are experienced in investing in the seed stage and Series A, and get some of their views on how to see the market, how to understand it, and how to approach investors the best. So without further ado, I think I would just let the panel introduce themselves. And let's start from the north. Sanna?
Thank you, Anders. Hi, everyone. My name is Sanna Westman. I'm part of the investment team at Creandum. I'm based in Stockholm. Creandum is a European venture capital fund that invests not only in Europe, but actually in European founders wherever they might be. As a fund, we focus on, we say early stage tech companies, not as early as PreSeed Ventures, but primarily seed and Series A. And that means that ticket sizes typically ranges from 500,000, 1 million in the earliest phases to up to 8, 9, 10 million euros for the larger A rounds. We're very agnostic in terms of what we invest to, as long as it can become really, really big, and ideally also category defining, at either changing a category completely or building something entirely new. Being based in Stockholm at the moment, we sort of have the eyes of the world upon us, both for positive and negative reasons. And Anders asked earlier if I could share a little bit on how it has been here. Should I do it now or after the introductions?
Please.
Okay. So as you may have seen in media, there has been quite a few formal lockdowns in Sweden and Stockholm in particular. Whereas it has been, quite firm recommendations that involve, for example, work from home if you can, avoid public transport, and so on. And just about the same time as stock market started plummeting, or end of February, early March, more and more companies closed their offices. And although they were not forced to do it. And what is quite interesting is that still holds. Since we don't have a formal lockdown, there's no restriction to let go of. So for example, I'm sitting at home, everyone at Creandum is working from home, so are the portfolio companies. And I don't expect that to change until the earliest after the summer holidays. But of course, there's been a lot of debate around this as well. I think there are enough people saying what is good and what is bad that don't have enough insight into it. So I won't make a judgment on that. But what we said is really be cautious, use common sense, and that's what we will continue to do for a long period of time.
Thank you. So sounds a bit similar, even though we have to stay home, or now we are slowly opening up the society in Denmark. So, but thanks for the introduction. Jacqueline, would you like to say a bit?
Sure. I'm a partner at PreSeed Capital. Quite recently, I joined only 9 months ago. And before that, I have a mixed career as an investor and an entrepreneur. Started my first company as a student, then spent some years in private equity. Also worked with Rocket Internet for a while in Asia, and led a large fintech company in Asia. That's also a little bit characteristic of our fund. PreSeed Capital, it's an entrepreneurial fund, and it's fully backed by Dutch entrepreneurs. So we have, for example, founders of Booking.com, founders of Adyen, and many other Dutch prominent tech startups, or not startups anymore, like major businesses who are investors in PreSeed Capital. It's a 66 million euro fund. We're on our 10th year, but the last fund was just raised last August, so very recent. What else? We invest in the Benelux and in the Nordics and in Germany. And we're experts in SaaS and marketplaces. So we only do SaaS and marketplaces, and are known as basically the SaaS and marketplace investor in the Benelux. We do tickets between 300K to 3 million as a start. But because approximately 2/3 of our fund is allocated for follow-on, we can follow on all the way through Series B. We're a very hands-on fund, I guess, as many other seed investors, but we support companies with anything from like hands-on recruitment to internationalization, which is a very relevant theme for any Benelux or Nordic company, given the small size of our home markets. We obviously help a lot on follow-on funding, also support on sales, for example, and actively leverage our network of LPs and our contacts. All of the partners in the fund are ex-entrepreneurs, so actually have some hands-on experience in building companies. And maybe as a preliminary heads up, I mean, B Capital is fully open to investing at this point because we have such a new fund, which we're only in the first year of our fund. It hasn't affected us too much, and so we're full on sourcing and not much affected by COVID at this point. Yeah.
Cool. Are you remote or still? Or how's that?
Yeah. No. Well, I'm in the office. I think I'm the only one. So we're very flexible, and actually, the Netherlands has been also quite pragmatic, similar to Sweden. We also didn't have a full lockdown, so you could go to the office or you could not, and people have been quite pragmatic about it. So on and off. I love the flexibility, the increased flexibility that came with COVID. Yeah.
Sure. Super. Sia, please.
Hey everyone, Sia from SeedCamp. So it's been now a bit over 6 years and a half that I'm with SeedCamp. At SeedCamp, we aim to back the most ambitious entrepreneurs from across Europe who really want to build global businesses. We are a generalist software investor. SeedCamp started back in 2007, but now we are investing out of our fourth fund. It's a £60 million fund. And we deploy this fund through our pre-seed and seed strategies. So at pre-seed, we actually lead small rounds of up to like £500,000 with a check of like 150, 200,000 for SeedCamp. And then usually we are able very quickly to get a few co-investors alongside us, some of them also being our LPs. And then we also invest in larger seed raises of like 1 to 2.5 million, where there we would invest up to 500K. So we are usually not the lead investor in those like larger seed, but often the second largest check. And we also have half of our fund for follow-on. So the idea is very much to then preserve that initial ownership over the like subsequent 2-3 rounds of the company. But our portfolio strategy is a bit different from most other early stage funds, as we invest in kind of like close to like 105 companies per fund, and with a smaller ownership target. So we target 5 to 7% ownership, and very much a pan-European strategy. So we were lucky actually to make a few investments in Denmark and actually to co-invest with Anders and PreSeed several times over the past 2 years with our current fund in companies like Pento, Whisper, Foundation, and Dream Data. And before that, also through our previous fund, we had the chance to be a PreSeed investor in Pleo. In terms of the whole situation right now, I mean, I would say that the UK has been like changing its strategy after like that. Boris pitched like the herd immunity strategy early on in like the whole like corona situation, and then quickly towards like end of March there was like this report from Imperial College that came out, and the strategy changed, and then Boris himself caught corona, and so we actually still now in very much of a full lockdown. Like since just like 10 days we now have the possibility to exercise for more than 1 hour outside and to basically enjoy like the outdoors a bit more. But it's not looking like anything is going to reopen before early July. And I think that when it comes to like the startup tech ecosystem, everyone is basically like working from home. And I think a bit similarly to what Sana was saying, I'm not expecting us to be back at the office before Q4. And to be honest, we are even considering to go like until like end of the year, like being like a fully distributed team.
So are you allowed to get into the office now, or you're not even allowed to?
No, we are not. We're not allowed. We're actually based in the Google campus in London. So I do believe that Google will be also extremely cautious, especially that, let's say, that building has let's say a lot of like external event attendees, etc. So it's potentially an area of risk. So yeah, I think it's unlikely before September that we can go back there, and potentially even not before January.
Are you considering canceling your rent?
We have a pretty good deal, let's say, with Google. So we are quite lucky on that front.
Thanks. Yeah. Michele, would you like to say some words?
Sure. Hi, everyone. Welcome. My name is Michele, and I'm an investor at Blackfin Capital Partners, which is a private equity and VC. Of course, I'm working in the latter VC based in Paris. We do fintech and insurtech only investments, and we cover stages from seed to Series B with a ticket that can range from let's say 1 to 15 million. And we are a sector focused, and the team is as well. So I've got my background is from finance, from corporate investment banking, and a bit of entrepreneurial experience myself. I'm on the opposite side actually. I come actually from Italy. The office is based in Paris, but I'm now on the mountains of Italy. So first country in Europe to test the lockdown, probably the worst trial ever. But somebody had to start with, so it was us.
Thanks for taking that.
Luckily, the lockdown is over since the 4th of May, so it's a month that I'm enjoying. I arbitrage between France and Italy, so I'm enjoying now a bit of release on the lockdown. At the moment, I'm on the Alps, so I cannot complain with weather and nice walks outside. Same story on as for SIA. We're probably not getting back to the office before Q4. Likely be, let's say, October, November. Nevertheless, we are trying to meet probably mid-June just to have like that physical present touch, because it's somehow missing. But I have to say that we have I said a private equity DNA. So let's say at start, so the remote work was something new for the company itself. But I have to say that we have managed pretty well. I mean, 1 week of confusion, then things have started working pretty nicely. And happy to join the panel, and looking forward to hearing the question of Anders.
Thanks. So I think we will run it like this. So I have prepared a few questions, and then after halfway through, I think we will open up to the general questions. But could you please describe as a start? So in general, what did you advise your portfolio companies to do when you faced this new reality? Jacqueline, would you like to start maybe?
Yeah, I think the first thing that we advised people to do was to prepare for the worst, in the sense that when COVID first hit, you had very little to no visibility of how long it would last, how deep it would go. And so to, as soon as possible, be proactive about the situation, primarily by really looking at how to cut your costs and lengthen your runway. If you're in a situation where your runway is like 6 months right now, that's a pretty tricky position to be in, because it is going to be very tough to raise funds at this point. So how can you cut your costs? And so that's the first thing that we did with companies. Look at what are the things that are non-essential. Unfortunately, a lot of consultants, temporary staff, for example, got cut. For a little bit, pause marketing budgets as well, depending a little bit on what business you're in. Looked at what kind of investments we should or should not do with the companies. So the first thing was to sort of like be safe in terms of your funding runway, in terms of your cash runway, so that you don't crash and burn. That was the first thing.
Any other comments?
Yeah, I think what we've done on our side was very much looking at the entire portfolio of our current fund, which we have like already 90 companies in that fund. So it took us a bit of time and like assessing the impact, and then quite quickly you realize that there are like a subset of companies that are obviously quite hugely impacted by the situation negatively, and for those ones, that's where you really need to like focus your time and like just like strategize on like how to potentially extend the runway and very much do what Jacqueline was just describing. But then we also saw that there is actually a subset of the portfolio that is hugely benefiting from the situation, where it creates like huge opportunities. And so you also have then like the middle ones, you know, where for who it's unclear. And then basically it's about a bit like looking at where you need to play defense, where you need to play offense. And that's what we try to like kind of like very quickly assess and like discuss with the founders. And I think we were quite lucky that maybe it's a question of like the stage at which like most of the companies in the current fund are, etc. And also the fact that quite a few of them had like raised funding between last summer and Q1. So we actually had quite well-funded companies at this point, but we obviously had a few that were looking at going out and raising in March, April, May. And for those ones, if they were in like the category of like the hugely impacted ones, we very much were like, okay, we need to like at all costs find ways to like just like extend that runway. And that's a bit the exercise we've done. And to be honest, right now we start to see actually the first few companies from the portfolio that are just like starting again like fundraising discussions. And those I would say are like mostly companies that are either benefiting from the situation or are in the middle category for who it's unclear. And when they are pitching investors, they need to like demonstrate a bit why potentially the current situation might also create opportunities for them and how they've been able to like smartly navigate this whole context. But we've been quite impressed. We have like several companies, even the ones that have been hugely impacted in the portfolio, that have been really creative and like, you know, launched like initiatives that maybe in the short term you will not see like immediate results of them, but actually in the long term, in terms of raising awareness about their business, like just like getting a lot of leads, etc., for what they are building, they could like really like 6 months, 1 year from now pay off. So it's been quite interesting to see that.
Cool. What about you, Sanna? I don't know, are your companies are maybe a bit more mature, or?
Well, both yes and no, right? There are some very early ones as well, especially ones that are not disclosed. But I think it was very similar. Early on, it was a lot about just getting an overview, like what's going on with the portfolio, and for every single company, have a look at multiple scenarios and what you do. I mean, in some cases it's easier, and those are generally the extremes. So I work a lot with digital health, for example, and a lot of those companies saw massive inbound. So there was more about, okay, how do we handle this massive inflow while we're going full on remote, so forth. But that was more of a positive stress. And then you have the other extreme, which you knew already from the get-go that, okay, this is all about, you know, preserving cash. So for example, the one company that worked with business travel, you know, it's gonna pick up. We just don't know when. But that's also quite, you know, easy to handle because it's a no regret of really cutting costs. I think the hard part is really those in the middle where we don't see an impact yet, but you know, likely you will have the 2nd degree or 3rd degree impact on these companies. So there we spend quite a lot of time just like understanding, maybe not taking immediate action, but knowing, you know, if this hits or if revenue goes down this much, you know, these are the actions we will take. So that it's just like knowing the options linked to, you know, having a sufficient runway, because as always, what you want to do and what we advise our companies to do is to raise from a position of strength, right? Not because you're running out of cash in 3 weeks. And so far, knock on wood, that has worked pretty well. But it's also been helped by a lot of the companies raising end of last year, beginning of this year.
So if we have because I think we see it the same way, and then we always tell our founders to go out and start fundraising before it's getting too late. So they should have at least 3 months of runway left when they are closing. So
Yeah.
so they need to start out quite early.
Yeah.
But
Yeah, I mean, we see that with our best performing companies, they typically raise every year, not because they have to, but because they can. Traction allows for it. So it's rarely an official fundraise. It's more often ongoing discussions, which lead to that.
Sanna, may I ask one question?
Yeah.
For example, talking about a company in business travel, like the first couple of months in COVID were like panic, no visibility, and now sort of the clouds are starting to clear, but we're also starting to see that, for example, in the next 3 years, there will likely be structurally, if not forever, well, maybe not forever, but at least for the coming years, over a much longer period, there will be drastically less business travel. To what extent are you having discussions with your portfolio companies in such businesses that might more structurally change on whether and how to pivot the business model?
Yeah, very good question. I mean, this is a question which it's accelerated now, but it's always relevant, right? You know, if the macro changes, how do you adapt your business model? So it is really there. I think in terms of the business travel case, it's still such a large market that it's, you know, although it might shrink, it's not going to vanish. That's our view at this moment. But that is, of course, there, and especially in terms of, you know, can you extract larger value? You know, what is that? Because now is also a time where you can focus on developing the product, right? Not go so switch those resources you would put into, you know, the sales and marketing. Can you at least part of that invest into the product development?
Have you seen any other particularly part of the companies who are hit? So is it mostly, you know, companies who are selling to large enterprises, or this is a general question for the panel? So is it largely for enterprises or SaaS companies, for smaller medium-sized companies, or have you seen any patterns there? Maybe Michaela, you have some comments?
Yeah, sure. Of course, I mean, touching basically upon the fact that we invest only in fintech and insurtech, so the sector has proven to be quite resilient, I have to say, and luckily enough, also large part of our portfolio company had their last fundraise 6 months before. So I would say in terms of portfolio, both in terms of number of companies, we are at a 10th of a seed camp portfolio, so we're at 9-10, but also we had the luck of having like a sector focused. Of course, within the fintech, which is a broad sector, we have seen quite some differences, and I think answering your question, Anders, we have got few enterprise sales, few SMEs. We do have transactional business, something related with prop tech, and I have to say that on the enterprise sales, there's been a sort of a stop the first month when there was like all confusion. Why? Because large enterprises needed to set up their remote strategy, which was not there, and so they took a bit, let's say, between a month and a half, 2 sometimes, and so the pipe has been completely cancelled or put on hold. We've seen a strong difference between the nice to have and must have software in general. When you offer software that it's something that absolutely needed, for example, from AML or in the banking ecosystem or other software as could be like security, then I mean that's priority number one. It is maintained. While on other software which are more related, let's say, to somehow HR, example, in the first couple of months, HR, we have seen a bit of reduction in the sense that the focus was on business continuity rather than on add-on and nice features to the workforce. So But things have been we've seen some recouping activities now, so things are better. With regards to SMEs, instead, I have to say the opposite. Probably the fear, as well as the absolute need to get some digital tools, pushed SMEs to adopt solutions, for example, cash flow forecasting, or things that help the business running, or having a broader view on the sector. So this, we have seen the opposite, larger pipes, different way of marketing, moving, like, for example, from sales outbound to pure, like, webinar like this one, when entrepreneurs from the SME world were joining, like, 400, 500 people at a time. So that was impressive, I have to say. So this is more or less what we have seen on these two, let's say, macro category. More than happy to deep dive in details if there are specific questions there.
Thanks. What about you, Sia? You have a lot of companies selling, I guess, very different ways.
Yeah, I mean, to echo a bit what Michele was saying, I mean, we've seen actually now a few companies that are using one of our portfolio companies solution, which is called Hopin, which basically allows you to do virtual conferences. And that has been, like, really working well. I mean, obviously the whole situation has been working really well for Hopin, but in terms of also other portfolio companies that have been able, to partner with sometimes, like, very, very large businesses that would have been, like, difficult to, like, kind of, like, partner with in normal times, and who now are all, like, kind of, like, keen to basically hear about new ideas, about, like, thinking a bit outside of the box, etc. So I know, for example, one of our Dutch portfolio companies, actually Gamei, launched a series of events for, like, the gaming industry with a partnership with Tencent, and that has been, like, working quite well for them. And we have, like, just another investment we've just made, actually, like, over the past 2-3 weeks, which is in the medical space. And just over the weekend, that they had this, like, global conference for doctors, where, like, you had, like, literally, like, the Minister of Health from, like, New Zealand, who was there leading a session, and then you had, like, doctors from all around the world, Asia, US, Europe, etc., who are exchanging ideas and having, like, just, like, breakout sessions, etc. So we've seen, like, quite a few companies thinking a bit creatively about, like, their go-to-market. And again, I mean, the impact of some of those initiatives might not be immediate sales, but I think that they should, like, really, like, pay back in a matter of, like, the next 6 or 12 months.
Okay. There's so many questions, and also the Q&A is starting to glowing. So one thing I need to ask you before going over to the Q&A is, for example, here at PreSeed Ventures, we are investing very, very early. So often we don't see, we don't have much material to base our investment decision on. So we can't see much traction. We can't use metrics that much. So we have to more do, I call it conviction-based investment. So we believe in the product and the theme, but especially for us, we are a big part of the investment decision is the team. So how do you invest in companies you have never met before, and how do you feel comfortable assessing these teams without meeting them? So 2 questions for everybody who wants to take.
Maybe I can start. We discussed this quite a bit, and we just came to the conclusion that we have to be comfortable with that. It's a mindset thing. Whether you meet in a physical room or a virtual room. For us, though, the key is to really spend enough time. And now we just have to get more creative around it. So we gave out a term sheet to a team 2 or 3 weeks ago. And there you had all this normal interaction where you discuss the business plan and whatnot. But we also set up some sessions, and this may sound weird, but just to have, like a glass of wine together, or have lunch, although it's over the desk. It felt a bit weird suggesting it, but
you have to choose the right meal if you have to eat in front of
yeah, exactly. You can just turn off the video. I'm sorry. But it comes to that. It's really about spending enough time investing in that relationship. And one hope that I have is that this could actually be beneficial to remove some of the biases which we all have. You don't have this, you go into a room and you feel like this is a great person, but you really have to dig a bit deeper and spend more time to build a relationship, and I actually think that can be positive.
Thanks.
We also, in addition to what Sanna is saying, we also try to get more validation from outside sources. So we spend a lot more time on doing, say, customer reference calls and also founder reference calls in an earlier phase. And I think that's a very useful source. So normally we would do this all the way at the end, maybe getting towards due diligence phase. And now maybe already after 1 or 2 meetings, we already feel like, okay, this is maybe something. Now at this point already we start doing these reference calls and seeing who do we know in our network, or can we talk to a customer or two, to sort of create a picture. And I think that's very helpful. So you need more sources of trust other than purely the relationship with the founders and the feeling that you have with them.
If I can just add a bit also, that has been probably one of the bigger question across, I think, a lot of VCs, how to handle these. I think that initially when we have started on an approach, the one that we know already are generally kind of priority, let's say prioritized, in the sense that we already had a touch point with them, we know the founders, etc., etc. Now we're slightly opening up things also to fully remote investments. We are approaching some in this week actually. I think at the end of the day, the things that are, for me, it's the heavier one to assume is the fact that I cannot get into the office of the company, because it's something that I loved, and you see a lot of. I think you can learn a lot out of the culture, how the company is doing. Of course, this is more true at Series A when the company is a bit more structured. This is something, but so far all the exchanges we had on Zoom have actually proven to be Zoom or another tool, Hopin maybe. The relational discussion have proven to be quite effective, to say, even more sometimes than like a face-to-face meeting, simply because you are super focused on the founder. You really try to. There is space probably for facial recognition AI that allows me to spot some let's say feelings or emotion or something that's not going wrong in the future. Looking for that.
I do feel that you have to put more effort into getting to know each other personally, because a tendency in these Zoom calls is that you go, okay, nice to meet you, let's talk business, because you have less of the, the walking and talking or the coffee machine kind of sort of social interaction. So I think that's important, as Sanna does, and actually has a dinner, a glass of wine, which we haven't tried so far, but it's a good idea. But you really need to take some time to actually maybe learn a little bit more about somebody's personal background, or talk a little bit about your hobbies or stuff you do outside of work, so you also create a broader picture of a person.
Yeah, just to add a bit to what was already mentioned, I think on our side, I was just checking, we are actually already made 6 investments now in this lockdown period. Actually, only one of the 6 is a company that we had met before. Obviously, to some extent, given the stage at which we invest and the check size we have, it's obviously easier to take those decisions than if you're like taking a decision for like a 3 or 5 million check, I imagine. But we found it quite effective to invest like through Zoom calls and Zoom meetings. But we've also started to like just have like the chat group that we would usually create with the companies post investment actually much earlier in the process, and that was another way to have a touch point where it's much less it's much less formal. You can have you can joke a bit there, etc. So it's been a nice way to like get to know a bit the founders, so that has been helpful for us. And then totally echo so what Jacqueline was saying, so maybe like doing a bit more of like the kind of like reference checks and like trying to like chat with people who know the team, who like have like different experiences working with like those guys, etc. So that has been also helpful for us.
So it's still relevant to reach out, and you still we have actually the highest voted question right now is from Søren Poulsen, who asked if you still are doing investments and if you take online meetings with new applicants.
So yes, very much in our case. We are very active. We have this concept of like time diversification, when we're like pitching to LPs who invest in our fund. And this is about being very like strict on our like 3 years deployment of the fund and keeping the same cadence of investment over those 3 years. And we think that over a 3-year period, it gives you the opportunity to build like some diversification over time, because you're investing over like different economic cycles. And so for us, it's very much business as usual. It's been a very busy few weeks actually.
If you were to ask us 2 months ago, the answer would probably not the same as today. Today we've reopened a bit and start basically repopulating our deal flow and signing the first term sheets. While 2 months ago, of course, when there was all confusion, the point was like refocus on portfolio companies. Luckily enough, I think that the period has generated a lot of uncertainty from both worlds, startup as well as VCs. But now things are a bit more clear. Of course, there's still an eye on what could happen in the next few months, both in terms of second lockdown phase or economical recession. But it's definitely I echo what Sia said. So very interested in looking at new companies and how actually I think one important element that I value a lot, it's now we can challenge startups and founders even more, because we can ask how they managed their business under COVID, which was kind of a stress test. And it's very interesting to see how they've reacted. And I think you can spot a lot of maturity out of founders that have been able to handle the situation under, let's say, unexpected conditions.
That's Christopher. He's asking if you're seeing new trends and structure and sizes in the early stage investment climate. I would also I've heard some VCs arguing that valuations should drop. So I would like to hear what you think about that, but also combined with seeing, I have seen all the rounds that we have raised, our portfolio companies has raised last year. It's been bigger and bigger rounds. So now it's normal to raise like 2 million euros in a seed round. But if the valuation drops, what do you think about the round size then? Because I mean, if the valuation drops and the round size keeps the same, you would need to give more away of your company. So how do you see that?
I think what we expect, we haven't seen it yet, but it's a bit of a time lag, right? Until you have enough data. But we expect that there's some companies, the ones that are really performing or might actually also benefit from this situation. And you won't have much change there. If something, it might actually even increase because more and more investors, have a higher hurdle or threshold to do the actual investment. So the change in valuation, I think, is that we will see a larger spread probably, and the ones that will be impacted are probably sort of the medium performing companies. Either that they will raise at much lower valuation or maybe not be able to raise at all. This is what we expect, but we haven't seen it yet. I think few more months will have to pass.
Do you invest in medium companies?
Sorry?
Do you invest in medium performing companies?
No, we don't, but there's a lot of funds that do.
I think the main thing what go abroad is uncertainty, and uncertainty always factors into risk, and risk always factors into valuation. So valuations are impacted, and also for a good reason. Whereas I can imagine that the first sort of like feeling of an entrepreneur is like, wait a minute, we talked about this valuation, then 2 weeks later COVID hit and now my valuation is 20% less. I feel that's opportunistic, right? Or you put me with my back against the wall, I don't have any other options, and now you're abusing the situation. But I think, whereas that might happen, and you should be very, very cautious to work with investors that, try to abuse the situation. There is also good reason why valuations have been impacted. Valuations were very high, by the way. You also see, of course, the correction in public markets, right? Initially, the markets dropped, 40-50%, and now it's like maybe 20% less. And I think you see the same level of uncertainty reflected in the private markets. In certain cases, for example, in one case, we did a B2B SaaS investment, and the company has big exposure to offline retail, like for example, fashion retail and food retail. Well, that is a company where there's so much uncertainty. So we decided to push through with the deal, but we structured it in such a way that the valuation will be retroactively adjusted for the performance this year. Because we said, well, we could factor in the valuation right now, but we really don't know what will happen. So any sort of like assumption we make is unfair. So why don't we say we don't know, and we'll have a retroactive valuation adjustment.
What do you guys think?
Yeah, I think, on our pre-seed activity, there I don't see much changes. We always get in the same valuation range, and the round sizes are in any case quite small, like 300, 400, 500K. And we haven't seen any change there with founders coming, wanting to raise less, or just being pressured by the market to raise less at this stage. I think at pre-seed, interestingly, quite a few of our co-investors are angels. Usually when it's not PreSeed Ventures, they are angels. And there we've definitely seen a slowdown a bit, because I think, angels just assessing their own financial situation, probably with the level of uncertainty, they were a bit less keen to write checks. But especially in an ecosystem like London, there are quite a few very active angels that are almost like micro fund, I would say, in their way of operating. So some of those guys have still been active alongside us, but maybe slightly less interest from angel investors. But I think that will pick up again. And when it comes to the seed rounds, totally echo what you were saying before, Anders. I think in pre-lockdown, we were seeing just seed rounds of 3-4 million pounds, and we're whoa, that's starting to be really, really expensive and really big rounds. We want to get in at maximum post-money valuations of 10 million, and actually, so we're not extremely price sensitive, but still we are thinking about that 10 million post max, and we were seeing that more and more even companies were coming with very limited proof points, and they were raising 3-4 mil. So that was a bit scary for us somehow. But I think we will see less of those. it seems that right now we have again like a pretty active pipeline of like seed opportunities or so, but those are like rather in the like kind of 1 to 2 million range, which also suits better our strategy. So it's going to be interesting to see how this also evolves over the next few months.
There's a high voted question from Eva, who asks if you're changing, starting to thinking out of the box, or if you're going back to basic, and or maybe re-evaluating whether to invest more in early stage, pre-seed even, or how do you see it? Do you change any of your structural things?
I think maybe the natural tendency of investors is to move a little bit more upmarket towards Series A or a little bit later rather than earlier, because the earlier, the more risk and the less proof, right? And the less personal contact. The earlier you are, the more the investment depends on the personal relationship that you have. So it's a little bit safer to move a little bit later. I think for us, it didn't change our focus much. I think we're still very much, it hasn't changed our focus at all. You ask, are we focusing maybe more on companies that are struggling the most, female founders, solo founders? I think for us, by default always, we have never invested in solo founders. We see that definitely as too risky, too tough, and we want a team to have a complete skill set, primarily the commercial and the technical skill set. I don't think that female founders need to be, I hope they're not struggling so much more than other founders. I think we hope, or we try to have zero gender bias. Unfortunately, 50% of the partners in our fund is also female. But yeah, what we do try to do is to be available. So we actually have regular, we recently had like Fun Fast Friday, or we have open office hours. So in which we try to entertain as many founders as possible and ask their questions. So I think that maybe we try to lower the hurdle, because it can be quite intimidating. And I know it's primarily for female founders who might be a little bit more conservative in their thinking of like, oh, am I ready? Am I worthy of VC funding? So we try to lower the hurdle by having a very easy access, low barrier conversations. And, if you have any questions, like definitely feel free to reach out to me on LinkedIn anytime. I'm really happy to help you with whatever.
That's an invitation.
It is an invitation, yeah.
And I think for us, it's been two parts. One is that when you don't have, the physical ways of meeting, especially early stage founders, we try to set up more accessible ways of doing it virtually. So we're quite quick on opening up the office hours. We did them once a week. Now we're doing them once a month. So, having, becoming more accessible without being able to meet people, that is one part. Another thing, though, is you have not at all thought about moving more upstream. Rather the opposite. We spend quite a lot of time thinking about, okay, we have a crisis right now, and what of the effects that we see will stick. What are trends that have been further accelerated, like telemedicine, for example, is one of them. It was already ongoing, but this has just made it move much faster. But there are also things which we believe are sort of ignited at this moment in time. I won't tell you which ones we believe in yet, because that's our little secret. But those are areas where we will actively look for companies that are very, very early stage, but can ride on this change.
Thanks, Sanna. So thanks for all your very wonderful answers. The time flies, and I just noticed that it's 3 minutes to the stop, and I know all the founders are so busy, so I think we have to keep the time. I promised if any one of the people who has been listening now has specific questions to any of the panelists, you are very welcome to. You can reach out to me or to PreSeed, and then we can distribute the emails if you can't find them online, or else I think you can just hook up on whatever social media platform.
You can probably guess them.
Exactly. Yeah, you can guess them. I just one last thing is that here at PreSeed Ventures, we also like to, lower the barriers, just like Jacqueline just mentioned. So we have these open door sessions where we give direct feedback on ideas that are not ready for pitching, but where you just want to, have some immediate feedback on your idea, and no preparation from our side, but just, and the next one is 23rd of June. So get into PreSeed Academy and sign up and see if you can get a spot. I think there would be quite a few spots open there, half an hour. To wrap up, thanks for being here. And I think everybody said they were open for business. It sounds like people are getting used to investing, and just reach out. Maybe the time hasn't put such a hard stop on funding, at least here at the pre-seed seed stage. At least that's what I heard from the people. And remember to bring a good meal if you are meeting up with your investors, and you can maybe share a lunch sometime. Okay, but thanks Sanna, Sia, Michele, and Jacqueline for joining, and thanks to everybody of the participants. I'm sorry we could have kept on going, but we have to shut it down now. So thanks everybody. Thanks.
Thank you everyone. Bye.
Thank you. Thank you for organizing.